Well, the last little while, we've seen a couple of record sales. Sotheby's saw a Gustav Klimt portrait of Elizabeth Lederer go for 330 million Canadian. A gold toilet considered art went for 12 million. So is art an investment? Our next guest has encountered many savvy business professionals who fumbled when trying to make that perfect art deal. With decades of experience, she knows all the pitfalls of art investing and how to make an informed decision. Here to share her wealth of knowledge is the Fine Art Group's president of the Americas, Anita Heriot. Anita, thank you very much for joining us.
Well, thank you so much. Glad to be here.
I have to ask, who or what buys something like that Klimt painting for 330 million Canadian?
Someone very, very wealthy. Well, what's really interesting is when we're asked all the time by ultra wealthy clients, I'm interested in diversifying my portfolio. Art is an interesting investment. It's semi-liquid. You can park, if you're buying the right thing, you can park your money there. It can sit there. It doesn't fluctuate the way we see, stocks fluctuate. So they'll say, like, what percentage of my portfolio should be in these assets? And this brings me to the Klimt. I'll get there, I promise. And, typically, we don't like to see clients exceed more than 4% of their, overall wealth portfolio in art investment. Now that can fluctuate up or down depending on a client's real passion for that asset. But so to give you a sense, if someone's spending over $200 million in an artwork, note that means, their true wealth is, tremendously higher if, it's somewhere below 10% of their, portfolio. So, we did see what is pretty interesting is that kind of post 2009, when we saw the market just crash and we thought, oh, who's going to buy a piece of art? Nobody. What we actually saw was an incredible increase in the acquisition of these art as assets, and primarily coming from countries that hadn't traditionally kind of gotten involved in these kinds of acquisitions. China, Taiwan, Russia at the time, not now, Brazil, India, Middle East. So what we've seen over the last 20 years is a real entrance in the marketplace of ultra high net worth clients that are really interested in acquiring these works for a variety of different reasons. Everything from showing kind of nonverbal ways of communicating power, right? You walk into a house and you see a Klimt.
You're going to go,
there's something important going on.
It's not that print I have from MoMA. What kind of a return does art offer? And I mean, for the people who aren't the ultra wealthy, can you invest in it? Are there ways to look at art as an investment?
Of course. But like any investment, whether you're buying a stock or buying a piece of real estate or doing forensics on a business, it's all about the due diligence. So of course you can acquire artwork as an asset, but when you look at an asset, you're thinking ROI, right? Mm-hmm. And I have a lot of clients, we have a huge advisory business, meaning we help clients buy, and clients will say, hey, I'd like to buy art. Great. And then I say, all right, are you okay with taking $100,000 in one bucket and putting it in another and having it worth zero? And they're always like, no, I don't want that. And I'm like, well, that's called a decorative acquisition, right? It has nothing to do with ROI. It has nothing to do with investment. But if you don't do your due diligence, that can happen. And they're like, well, no, I don't want that. And I say, well, if you have $100,000 in one bucket and you put in another, do you want it still to be worth $100,000? I'm like, yeah, I want that. And that's financial preservation. So you can buy art to hold its value, but there are kind of 9 categories of analysis we use to determine value. And if any of those is a D or an F rated, you could have something that is not a good acquisition. The third kind of client says, I have money in one bucket, I want to put it in another. Is it, are you looking for ROI? And that is a completely different methodology you utilize when you're looking for ROI than you would for financial preservation.
Okay, I want to bring Rob in for a second, who's our guest co-host this morning. Rob, you have a question for Anita.
Yeah, I was just curious is if you think of art and you use the analogy of the stock market, are there parts of art that are kind of have higher growth potential and maybe higher risk? And are there parts of art that have maybe more stable returns and have a more predictable outcome for those more conservative art investors?
Terrific question. I love the way you asked it. Yeah, so we have what's called kind of blue chip art, and blue chip art's like a blue chip stock, right? It's steady Eddie. And these are typically artists that kind of change the way we look at art history, right? They're like catalysts of change, watershed moments in art history. So think Monet, think Picasso, right? Think Basquiat. And again, you could buy terrible Monets and terrible Basquiat. So again, that due diligence is still really, really important. But if you acquire them, it's like you can park your money there and to buy a good one at a good price, and it's a solid investment. Will it grow exponentially? No, but it will hold its value. But then there's a whole group of artists, and we saw this specifically when the market was out of control, especially around from 2015 to 2022 with a little COVID in between. We saw people investing in living artists that those categories of analysis we use don't apply necessarily. And these are artists that are acquired by significant galleries, but they didn't change the way we look at art history, right? They're risky acquisitions, but what we see is a lot of flipping of these artworks. They spike high, they go low, and a few of them hold their value over time. And when clients say like, hey, I want to buy new artists, I'm really interested in, buying and selling. And I'm like, well, great. Do you like penny stocks? I'm like, what? So it's the same. There's no difference. But there are additional levels of due diligence we do when clients do want to buy living artists who don't have strong, long careers.
Can you have any emotion in this, or if you're looking to buy stuff, do you have to actually just remove all emotion from it? I mean, because in the end, some of the stuff you'll actually have hanging on your wall, and it's still an investment. Can you have any emotion when you're investing in art?
Well, my job is to take the emotion out, right? I'm like a robot, and that's what I need to do for my clients, because I don't want them in an auction house bidding, right? The thing about auction is it works when you have two bidders who are psychologically connected to the experience, right? That's all you need are two bidders. So our job is to kind of get in front of that, determine value, and basically set a baseline for what's appropriate in the market. However, a lot of people who collect art and wine and other assets and jewelry, it's experiential, right? You can still live with your art, which is one of the great things about the investment, right? I have artwork right behind me. So it is experiential. You can have passion, but you really do need to have an unemotional side to that process. And that's why, it's important to work with someone who knows what they're doing.
Okay. On that note, Anita, thanks very much for joining us and educating us. We appreciate it.
Of course. All right. Well, thanks so much. Have a great day.
You too. Anita Heriot is president of the Americas for the Fine Art Group.